Hey guys, it's Brandon here, and we're on site today right here in Myrtle Beach, South Carolina. I'm going to talk to you about risk, how to measure risk in dollars. In today's video, we're going to work through a handful, two major scenarios in calculating risk when it comes to oceanfront condo investing. Now, I've been preaching about risk for probably the last 2 months all over my YouTube channel, but I wanted to get technical and granular and take you into Excel and show you how to calculate risk in dollars. Because when you jump into the nuts and bolts of risk, it's very different than a surface level understanding. Now, I want you to watch this video through to the end so that way your next investment or your first investment is not a flop. I want you to make a savvy investment decision in our market. If you don't make a solid investment decision, it's going to stifle you, it's going to set you back, it's going to slow you down from your ability to build wealth when it comes to real estate investing. I want you to have a great first-time experience. So I've chocked this video full of the valuable content that you need so that you make a savvy investment decision. And you partner with a solid and professional agent like myself to ensure that all of your numbers are ran and that you take calculated risk. Now, I don't want to hold us up. Let's get into the video now. You'd like to invest in an oceanfront condo at a beach resort. I'd like to show you how they make profit and break down all their expenses so you understand how they operate, how they appreciate over time, and how to choose the right property manager for your goals. I'd also like to let you know what your HOA includes, how the location best services the tourist booking your unit, how your tourist can navigate the area to the best attractions, restaurants, and local events. I'd like to give you a market report on the resort that you're checking out today so that you make savvy investment decisions. And if you stay tuned until the end, I'll show you my top picks for the units that have appreciated the most in our market or generated the most gross rental income. So no matter if you're a first-time investor, a seasoned professional transitioning into the real estate game, or simply a casual investor who wants to buy an oceanfront condo to rent out while you're not using it for vacation. Whether you've got 15% to pay down because you're financing or you're a cash buyer, if it's an oceanfront condo you're after, you'll be better because I'm aiming to give you a 10 times return on your time for watching this video to the end. All right, guys, so let's hop into the math. Now, we've got scenario one. Scenario one is based on a larger condos at higher tier resorts with excellent reputations. Then there's scenario two. This is the very top of the spreadsheet. It is based on smaller condos at lower tier resorts with less reputation. Now, this is going to become very, very important for first-time investors because you're still figuring out the short-term vacation rental business. So the reputation of the resort is going to be a huge factor in reducing risk, because if you invest at a solid resort that has a strong reputation, well, guess what? That reputation is going to carry you those first few years and, pretty much over the life of that investment if you invest at a solid oceanfront condo or resort. Now, scenario one, we've got a one bedroom. We've got the type is going to be a 2-bedroom, 2-bathroom. We've got a purchase price of $250,000. Total risk involved, I've got you at 0.80. We're going to jump into the nuts and bolts of that in just a minute. The amount of risk at 80% risk is $200,000. So technically you're risking $200,000 in scenario one. Now, scenario two, I've got you purchasing a 3-bedroom. It should be 3-bedroom, 2-bathroom. Your price, I've got you at $500,000. We've got 0.30 in risk, only 30% risk. Now, this puts you at $150,000 worth of risk. And we're going to jump into the nuts and bolts on that scenario as well. Now, very simply, to calculate that risk, we're going to take the probability or the decimal, which in the top case is 0.8 or 80. In the bottom case is 0.3 or 30. We're going to multiply that by the purchase price. Technically, if you're financing, you could multiply that by your down payment because that's the amount of money that you're putting at risk when getting into the deal. But I used the purchase price. It keeps it simple. You can see it. It's very, very easy to understand the concept. All right, so let's work through our risk factors. We have positive factors and we have negative factors. All right, it's that simple and that easy. Scenario one is going to be the negative factors. Scenario 2 are going to be the positive factors. Very, very simple. So as far as positive factors go, for scenario 1, we have less competition. So I've put that at a 0.1% risk because there's less competition when you purchase a larger oceanfront condo because there's less supply in the larger oceanfront condos. There's less of them on the market. There's less of them, period. Smaller oceanfront condos, there are lots of them. So there's a lot of supply. So you can see on the flip side of that, for a negative factor, there's more competition. So I've doubled the amount of risk there. Essentially, you've got 0.1 for less risk, you've got 0.2 for more risk. There's double the risk, in my opinion, when purchasing a smaller oceanfront condo as opposed to a larger oceanfront condo. Now, less special assessments, and this is one that will probably, a lot of you didn't see coming. Ultimately, I didn't at first. Less special assessments. When you purchase a larger oceanfront condo at a better or higher tier resort, they're going to run their HOA very, very well. If they run their HOA very, very well and have higher HOA fees, well, guess what? Most likely, they're going to issue less special assessments because they are putting away reserves and it's already calculated for and taken care of in your HOA fee, in your monthly dues. If you purchase at a lower tier or resort with lower HOA fees, well, you're more likely to get hit with special assessments. So again, I have doubled the amount of risk in special assessments for smaller oceanfront condos with that 0.2 versus larger oceanfront condos with that 0.1. Now, more appreciation. If there's more appreciation in the deal, then obviously there's going to be less risk in it because I'm making more money. So there's less chance that I'm going to lose my money. So we've got more appreciation with a larger oceanfront condo. With this, the larger oceanfront condos, the solid ones, they'll make $300,000 over a 10-year period. A smaller oceanfront condo, you'd be lucky to make $100,000 over a 10-year period. You are doubling the amount of appreciation you get with a larger oceanfront condo. So more appreciation, I've got you at 0.1, 10%. 0.1. Less appreciation on the smaller oceanfront condos, we've got you at 0.2. We have doubled the amount of risk. It's more risky to purchase a smaller oceanfront condo because it doesn't make as much money in appreciation. Therefore, there's a greater chance that I'm going to not make money, which is the whole point of buying the oceanfront condo in the first place. Now, good reviews. It's a positive factor. Well, there's no risk in that. And honestly, it's more likely with a larger oceanfront condo at a higher tier resort that I'm going to get good reviews. So I'm not really taking on any risk there. But bad reviews at a lower tier resort, yes, there is a chance when when people come to show up, they go, oh, this place is horrible. I don't like it. It's got horrible amenities. It's not well kept. It's lower tier. It's not as nice. You've got more chance of getting those bad reviews. So I've put 0.10 for more risk for the smaller oceanfront condos. Now, less renter fraud. Now, this is one you probably didn't see coming too. On the larger oceanfront condos, people are not necessarily, you won't get as many people that are going to complain to Airbnb about your unit and try to get free rent, honestly, in my opinion. Now, on the smaller oceanfront condos at those lower tier resorts, yes, you are going to get more people that are going to try to complain to Airbnb and get free rent from you. It's that simple and that easy. Most of the time, the larger oceanfront condo resorts don't have as much renter fraud. Again, that's my opinion. If you don't like it, text me or email me or call me 843-360-1737 or drop me a comment in the video. I want to hear your reasons why. Now, let's look at my notes on the bottom here, guys. I've got basically risking 80% of the money for a smaller condo. So basically 80% of that $250,000 that you're putting up to purchase a smaller oceanfront condo, you're risking 80% of that. That's $200,000 in a dollar amount. Now, you're only risking 50% of the money for a larger oceanfront condo. 30%. Only 30% of that money. Now, with a larger oceanfront condo, you're getting 2 times the amount of appreciation based on the historical performance. With a larger oceanfront condo, you're getting 2 to 3 times the amount of annual profits. And with a larger oceanfront condo, you're getting 2 to 3 times the amount of annual tax write-offs. Now, If you're self-managing, it's less work for the larger condo due to lower turnover, but still more profit. Guys, what I'm saying there is, essentially, if I buy a small oceanfront condo or a large oceanfront condo, no matter what kind of oceanfront condo I buy, there's going to be turnover. Now, the smaller oceanfront condo, you're going to have to rent it a whole lot more to keep it profitable and to make as much money as possible, because you can't charge as much on the average daily night rate. The larger oceanfront condo, because I can charge so much on the average daily night rate, I don't have to rent it out as much to make the profit. It's that simple and that easy. So why wouldn't you want to be in the luxury part of the business, or in a part of the business that you can make more money when you're doing the same exact work? Ultimately, you're doing all that work and having all that turnover for a smaller oceanfront condo. But you could just be in a larger oceanfront condo, have a whole lot less risk, do less work, less turnover, less headache, less gas, and make more money. It is a no-brainer, guys. There is more risk when purchasing a smaller oceanfront condo than a large oceanfront condo. And I believe you should invest in oceanfront condos in Myrtle Beach, South Carolina, because this is the fastest growing area out of the 150 most populated areas in the entire United States for the last 3 years in a row, according to U.S. News and World Report. This helps to insulate our market from many of the ups and downs that the rest of our nation's real estate market experiences. This can help you have a more stable rental property. I believe you should invest in oceanfront condos in Myrtle Beach, South Carolina, because they have a tremendous upside when compared to money market accounts and the stock market, due to the appreciation they earn and the potential of higher annual yields through their gross rental income when compared to these other investments. Money market accounts and the stock market don't have the upside of added appreciation. I believe you should invest in oceanfront condos in Myrtle Beach, South Carolina, because while our prices have risen and have held their value, we're also much cheaper than other places like Florida. Where else can you go and find an oceanfront condo for as little as $100,000? If you're getting into the real estate game or expanding your current portfolio, the bang for your buck is sitting right on the Myrtle Beach, South Carolina oceanfront. It's just like with anything. On the surface, that surface knowledge does hold true. But when you dive into the nuts and the bolts of it, it could be a completely different story. There's generally another rule, another law, or a higher truth. The law of gravity holds true until the law of aerodynamics kicks in. Yes, obviously, if you're risking $150,000 versus risking $250,000 purchase price, yes, there's some logic there. You know, a lot of people will think, oh, well, if I spend more money, I'm risking more money. Yes, for a general rule of thumb, yes, that is the case. However, when that law of aerodynamics kicks in, the law of gravity doesn't hold true anymore. It holds true. There's just a higher truth that's overcoming it. It's the same thing here. Yes, on the surface, if I spend $250,000 instead of $150,000, I'm putting more money at risk. Yes, that holds true. However, when we dive into the nuts and bolts of it, how we position you in the market and the other relevant risk factors also hold true. And when you comprehensively look at those risk factors, all of a sudden you start second guessing, oh, wait a minute. Should I buy a $150,000 or $200,000 condo? Or should I buy a $500,000 condo with a whole lot less risk? On the surface, you'd think the $500,000 condo was more risk. But technically, when you get into the nuts and bolts of it, it is less risk, a whole lot less risk. And that's what I want you to see. That's what I want you to understand. How you're positioned in the market with regards to competition, and turnover, and appreciation, and all these other factors, special assessments, all that stuff plays a valid role and needs to be part of your decision for real estate investing. It's that simple and that easy. Now, guys, I get calls, emails, and texts all the time from investors just like you looking to make an investment into our market. I'd like to help you make a solid, savvy investment decision. I do all the numbers for all of my clients. I do require proof of funds. Send that over to me. Give me a text message or an email. Get in contact with me. Let me help you take a calculated and measured investment decision. It's that simple and that easy. I know where the best deals are in our market, and I want to put you in them. 843-360-1737. I get calls and emails every day from investors just like you looking to make their move into the Myrtle Beach market. They want to invest in short-term vacation rental properties. They want to invest in oceanfront condos. They want to know where the best deals are in our market. Well, guys, you're talking to the right person. 843-360-1737. I'm going to help you put your hands on the best deals in our market. If you're a first-time investor or a seasoned investor, if you're 1 year, 6 months, 3 years out, I don't care where you are in the investing process, pick up the phone, give me a call, send me an email, shoot me a text message, and let one of the many stories on our channel be one of your stories.